Attendees are slowly trickling in. I think we are gonna start while people log on. It takes a few seconds, but welcome everyone to the inaugural African Hidden Champions webinar, which is going to be part of the regular series that our initiative has started to put together. So once a quarter, this format will give you the opportunity to meet exciting businesses from across the continent that the African Hidden Champions Initiative, powered by KfW DEG and Africa Foresight Group, has identified and profiled. If you don't know much about the initiative yet, I propose that you have a quick look at our website before you dial out today or after, www.africanhiddenchampions.com. There you'll be able to learn a lot more about what we're doing here. But I'm going to start with introducing our session and our esteemed panelists. Our session today is about African hidden champions and how African companies can become competitive against foreign multinationals and take the global stage. And I'm very happy to be joined by Salma Okonkwo, who's dialing in from Nigeria, Dr. Ajay Patel, who's dialing in from Kenya, and Franziska Hollmann, who's dialing in from Germany. Let me introduce the three panelists briefly. Salma Okonkwo is the chair of UBI Energy, a very, very successful energy conglomerate from West Africa that has completed one of the biggest landmark deals a couple of years ago in the West African energy industry. Currently, she's also in the course of building the biggest solar farm in Ghana, a project that is very close to her heart and amongst many other business activities that she pursues. Dr. Ajay Patel, dialing in from Kenya, welcome, is the co-founder of Dawa Group, a big pharmaceutical company that has taken the stage in the East African and Pan-African pharmaceuticals industry very, very successfully. And we are very happy to have you here today. And you're also a pharmacist by background. So pharma is all around for Dr. Ajay Patel. Welcome. Franziska Hollmann is also here with us. Franziska is the Director of Corporate Africa at KfW DEG. And I'm very happy to have you here, Franziska, as an important partner of the African Hidden Champions Initiative. You've been in the development finance industry for decades, have worked with a lot of companies, both in Africa, Latin America, and other parts of the world. And we're very happy that you have dedicated some of your time professionally to help us explore and discover hidden champions companies in Africa. Welcome to all of you, dear panelists.
Thank you.
Thank you very much.
So Franziska, before we start the exciting discussion, I would love to hand over to you because you're our important and esteemed partner for the African Hidden Champions Initiative. Maybe you could briefly say a few words about the initiative so that people have a chance to learn more about what it does and how it works.
Thank you. Thank you very much, Yasmin. Thanks, Salma, and thanks, Dr. Patel, Aya, to participate today and to, well, join us through this journey as the first hidden champions today. Well, DEG supports African private companies for almost 60 years now with long-term financing and advisory services. So our role is to contribute to the economic development by supporting private companies and helping them to be sustainably and in environmental and social aspects sustainable. So we are very much convinced that the private sector plays a crucial role in the development of a country, and this is through creating employment, income, and driving information. For Africa, most of the people associate with African private sector the large agribusiness companies, the mining industry, the infrastructure projects, often with non-African owners. But it is also a fact that, however not very well known, that there are so many successful and an increasing number of African entrepreneurs, family businesses, which create markets, which produce locally, which source either locally, international, develop own brands, and changing the picture, like these two companies we are talking about today have been doing and are doing. So with the initiative African Hidden Champions, we want to, well, first of all, change the perspective about Africa and also change the narrative and show that Africa is attractive for investors as well as for entrepreneurs and talents. We want to encourage talents to become entrepreneurs, just giving good examples and some ideas about what does it mean, some lessons learned. And we would like to make African champions visible, also internationally visible, so that they get better access to financing and to markets and get some boost in their already successful development. So the Hidden Champions are showcases, which will hopefully encourage many others and boost the private sector. The case studies we already published on the webpage. These are success stories, obviously, but although they have a focus on key success factors, it also tells about, well, series of obstacles, sometimes decisions which were maybe going into wrong direction or different direction. So I've never heard a successful entrepreneur who didn't tell me after the second or third glass of wine. So there were already quite some failures on its way to be a successful entrepreneur. So we also want to learn from these cases, and successful entrepreneur takes it as a chance and the lessons learned and always moves forward. So we are very happy that we found Africa Foresight as a partner for this initiative. And it started really, really great with a very good organization and a very good young and ambitious team. And more or less immediately after we launched the initiative, we started with the selection process. Africa Foresight and we together now have a quite large network of companies, and the team selected from a large number of companies the first two hidden champions. So it's a various step selection process with various criteria. And then they presented a short list to the steering committee. The steering committee is supported by very professional partners. They come from a university, from business, they are business leaders, and from one of the largest banks in Africa. So thank you very much for Yasmin, for first of all being our partner, for preparing together with your team the case studies, and for organizing this webinar today. And yeah, most of all, thank you very much, Salma and Dr. Patel, to be with us today and give us a chance to learn from you and to hear about your experience. Thank you very much. And looking forward to the discussion today.
Likewise, Franziska, thank you so much for this nice introduction. We are also very happy about the partnership, and I'm extremely delighted to have Salma and Ajay here today, who have participated courageously in the exercise of having their businesses profiled. To all the attendees, if you go to the chat, which should be somewhere at the bottom of your screen, no matter if it's phone or laptop, you are going to see a link to our website where you can read the short summaries of the case studies of Salma's and Ajay's businesses. Again, Salma's business is UBI Energy, a big energy conglomerate from West Africa, and Ajay's business is Dawa Group, a pharmaceutical player from East Africa, Kenya particularly. So you can have a look at the case studies while we are talking. We didn't want to take too much time describing the businesses because that's all already written down. We want to get to the gist of things and learn something from these amazing entrepreneurs. So Salma, I'm going to start with you and get right into business if that's okay.
Shoot.
So, Salma, I think you have gone through a really kind of landmark journey with UBI Energy. You built a business from basically $1 million in revenue to $100 million in revenue within a few years, and then successfully brought in a really big partner to continue the journey. But of course, now it's been a journey of probably close to 20 years. So what I'm curious about is, looking back, what would you say was the defining moment of your business growth story with UBI Energy, and why?
There are a few, gosh. I think the one that jumps out to me right now is when we made a very risky decision to utilize short-term funding for a long-term project. Very risky move, but it was either that or lose the very essence of our growth, which is being able to introduce and build the key infrastructure to continue our growth. I would say that is probably one that defined where we were going. So the backstory is that we were growing and we had gotten to a point where we had to expand. It was either we expand or we stay stagnant. And in the process of expanding, we obviously had gone to the banks and financial institutions to try and raise money. It was dragging, it was delaying, and we had a short window to be able to establish the infrastructure or take some ownership. And that required that we move to site and start some work. So we took a very risky move and used short-term funding to start the project whilst we were waiting for the banks and the financial institutions to give us the funding that we had asked for, because we had assumed that we had a good business case. They had looked at it and they were happy. They had actually given us a term sheet. So we thought we were the journey to get the funding, and we took this risky move. And it was risky because the banks delayed and were not able to meet our daily funding requirements. I mean, we had negative working capital. It was a really tough time for us, but if we hadn't done that, we would have lost the opportunity to have the infrastructure. And I can share which infrastructure this is. It is the only aviation tank farm in Ghana at the airport. Become a landmark infrastructure, and this infrastructure serves every airline that comes to Ghana. So it was a very dangerous move, but we knew it was either we take it or somebody else who had deeper pockets, the would take it. So it was critical for our growth, but it was a dangerous one, I must say.
I mean, I know your story, obviously, from our work together on the case study. And I am aware of the particular example you're talking about. And of course, in the absence of a strong financing environment, you are nearly forced into having to take certain risks. For instance, what you just mentioned, having to use short-term funding for longer-term projects. Would you do it again?
No. No, it was too dangerous. It got us into a lot of trouble with our suppliers. There was reputational risk. I mean, it was a really tough time. But I'm thankful that we were able to sail through eventually.
And I'm also aware that in that particular example, the aviation fuel tanks at the airport, you were competing quite a lot against bigger players in the energy industry who were obviously a lot better funded than you were able to be as a local player. So to ask a last question before I move over to Ajay, would you say that it's nearly a requirement for African businesses to move into higher risk decisions in order to be able to be competitive with these big players who are very well resourced and very well endowed with capital?
Not at the risk of losing your day-to-day revenue. They shouldn't take that risk in losing your day-to-day revenue, because if you already have a sizable business, and I always go forth and talk about being able to provide employment for a small group, if you are not careful, you might lose that. If you lose that, then you're causing people to become unemployed. We have a huge unemployment rate as it is. So I would rather you play it safe. We didn't, but we got lucky.
Well, I guess you didn't play it safe and it paid off, but I'm sure there are others where it doesn't go that way. Notwithstanding that, the question remains how we can make sure that African businesses have a similar, let's say, risk profile as bigger companies operating in the same sector by having the same access to finance. Anyway, I think we can talk more about that in the course of this conversation. As you know, I find your story very inspiring, but I need to make sure we get through our agenda. For those who want to read more about some of the examples Salma just gave and more about UBI Energy, go to the case about UBI Energy. It has a lot of interesting information about her journey and the obstacles she encountered. But now we have to go to Dawa Group, Ajay. I'm still learning to say Ajay because I've been calling you doctor for months now. But I'm very happy to have you here today and send my warm regards to Kenya. Welcome to the panel discussion.
Thank you very much.
So Ajay, people are hopefully starting to glimpse through the case about Dawa Group, a beautiful case of a really rich journey of a family-led business. I think one thing that stood out for us about your journey was really how you transitioned from trading to manufacturing. And I know that our team was really impressed by the high level of professionalism and organization that you've built in your group when we were on the ground with you. Everyone was just extremely inspired what you've built. So I have to say congratulations, obviously, to what you've done with your colleagues and co-founders. But I think this particular step from moving from trading to manufacturing is a big challenge for a lot of businesses, right? We have a lot of entrepreneurs across Africa who know how to trade, but getting into the actual operation of production and manufacturing is tough. So I was hoping you could give us a small opening statement or a few thoughts on what that entailed and what the biggest challenges were for you moving from trading to manufacturing.
Thank you very much, Yasmin. I thank basically you asked Yasmin from the Africa Foresight Group and Francisca from DEG for arranging this this webinar and this project, and wish you the best. Yes, we are involved with the DEG as well. A couple of projects at the moment, and I hope they go through. It's again part of manufacturing. Yes, me and my partner, Dr. Mohindra, we grew up, I've been in the pharmaceutical business with my family since a long time. And we were trading, yes, we identified a niche in the local market, basically fast moving generics. But then after about 5-6 years in the business, we realized that there was a certain market that we were not able to capture. And the only way to capture this market was to actually take the plunge into manufacturing. We did look at building, or did look at various options, but however, when Dawa Pharmaceuticals came up, which was a joint venture between Kenya government and Yugoslav government, it was at that time one of the biggest plants in Kenya or in this region. So we took a plunge, and that was a big plunge because it was way over our head. We didn't know anything about manufacturing, so we had to start from scratch, get in experts, learn the process ourselves. So yes, so one of the factors that led us into manufacturing was opening up a market for us that we wanted to get into, government business, export market, which which was non-existent at that time when we were trading. Get into business with non-governmental organizations, aid agencies. Aid agencies always have one of the criteria that they like to see where the drugs are manufactured, where the medicines are manufactured. So they're being that easy access to us. It also opened up new therapeutic areas for us, new products. It was, yeah. So that's another critical factor that made us move, is expanded our product portfolio tremendously. So those are the three main character factors I thought were most critical for us to move into manufacturing. Of course, since we didn't know much about manufacturing, we had to get a lot of outside help to turn the company around, turn Dawa around from being when we stepped into the factory, it was like a ghost town. Machines were not working, so it required a lot of rehabilitation, and then turned it around, and it's been a constant change ever since we took over. We're still changing. Even our project, major project this year, is a total refurbishment. So it's a never-ending process, manufacturing. Once you get into manufacturing, you like it, you love it, but it's got some serious headaches, especially pharmaceuticals, because of the regulations, which keep on changing. African countries are always behind the Europeans or the Americans in terms of regulations. So there's always evolution of regulations that we have to keep track of, and that results in major investments, major skill sets, requirements. So it's a never-ending process. It's totally different to trading. Trading, you buy and sell, finished. Here it's yeah, you're getting raw materials, you're packing materials, you're putting things together. Sometimes your formulations don't work well, so you have to go back to the drawing board and see how to make them work. So it's definitely a different process, a different. But overall, it gives you satisfaction, a lot of satisfaction. Yeah.
Thank you so much, Ajay. I think it's inspiring to hear that you're so honest that there were challenges, because you now look back and talk about, you just turned it around, but obviously just turning something around is a lot of sweat and work. I think that there's also something to be said about linking back to Salma's points earlier, the financing aspect. I mean, when you trade and sell, you deal with a lot of, probably working capital question, but it's basically a money in, money out kind of situation. Now, when you started a manufacturing business, you had to acquire an entire plant. So I'm also curious, as a follow-up question, to hear how you had to rethink your financial management and your fundraising strategy as a business, because doing that for a manufacturing operation, I'm sure, is a big shift, and also being able to acquire a plant requires a lot of planning. So can you speak a bit more to that?
Interesting, when we were traders, we had very little debt or zero debt. And then when we wanted to buy the unit, again, it was way over, the figures were way over what we could actually afford. So we, again, like what Salma said, took a risk. We actually went to the bank and said, okay, we want to buy this, help us finance it. I don't think I could be wrong, but I can't remember putting any more deep thought to it. We just took a risk. Sometimes you have to take a risk, like what Salma says. You take a risk, it pays, it pays. If it doesn't pay, yeah, then you suffer. So we took that risk. It was a very big risk, and then continued with the journey. One thing about manufacturing is it's like a big hole. Money keeps on going in. You don't really see it coming out. Very rarely sees it coming out, but yeah. So we had to really start thinking, and we learned a lot about financing. Learned a lot about working with banks and other finance agencies like DEG, which, yeah, we learned a lot. So, and it's a continuous process. We're still learning about financing. We're learning new and new things every day. And also the major task is how to get cheap money. You always hear that there is cheap money outside, but to get it, it's very difficult. We are partly there in terms of getting a relatively good financing. Kenya's advanced that way. A lot of international banks, a lot of international funding agencies, all the big funding agencies like DEG, Propaco, IFC, all in Kenya, who offer good financing. So that's the other factor that's helped us through, is working on how to get good financing. Thank you, Salma. Thank you.
Now, Franziska, let me come to you. I think something that is already standing out for me from both contributions is both of them had a big moment where they had to take big risks. And even if Salma says she wouldn't do it again, without taking these risks, she would probably not have been where she got to. So for me, this is already an interesting red thread between the two businesses and the two speakers we have, even though they come from completely different industries and geographies. But let me ask you, what stood out for you when we started to get to know these businesses? What did you find the most interesting about how they leverage opportunities to grow?
Yeah, well, what Ajay said is almost everything which we found extremely interesting. And Yasmin, you mentioned it before. We see many applications or many requests for long-term financing from trading companies and moving or transforming into this first step of manufacturing. And in many cases, or in most cases, it looks simple. So you really think, well, what is the big difference between trading, I don't know, grains and processing grains, for example? But there is actually a big difference, and Ajay highlighted some of the aspects. So it immediately called my attention that there's obviously one of there are other companies as well, but one of the very successful medium-sized companies which did this transformation and managed to also to integrate high-level experts. So in this particular case, I found extremely interesting that it's not only trading to processing, but in addition to that, it adds some complexity that pharmaceuticals is a very sensitive and complex product. It's not like grain mill or something a little bit more simple. So obviously, in addition to this long-term view which a processing company needs, or changing completely its mindset from short-term view, short-term trading, short-term cash flows into long-term planning, other type of risks. In addition to that, it's in a sensitive area and well, also a very challenging environment in terms of competition and business environment. You mentioned all these regulations, all the different players, the aid agencies, plus the government, etc. So that's why we thought, well, this is really a hidden champion and a very interesting success story. And for Salma's business and UBI, we were really enthusiastic and fascinated about a woman taking opportunities, taking chances, but in a very difficult environment. So it's a typical male-driven business you started with. So it's not the most natural thing to become an entrepreneur, but you managed, and you managed successfully. And obviously you needed a good network, but to take, as you said, very risky decisions, because the hurdles that you had to take were obviously higher than maybe for other colleagues or other people who would have done the same. So this story about identifying opportunities also in difficult environments, creating something new, changing the market, and then scaling the business, we found very, very, very fascinating, and thought this is a unique, completely different success story, different to Dawa Group.
Thank you, Franziska. So let's talk a bit more about competitiveness. I mean, what we found so interesting about these two companies we have represented here today is that you are both in industries that are very dominated by foreign multinationals. The energy sector in Ghana, Salma, when you started, was mostly dominated by big players like Total and so on. And Ajay, I remember from our conversations how often we talked about the fact that GSK and all these other big companies are the dominant players in the market. And of course, they have a lot of economies of scale also. So generally being competitive as a local player in sectors like energy or pharmaceuticals, but also many other sectors, can be really, really tough. And Salma, you had already pointed out the issue around access to finance and you having to leverage very expensive sources of capital to run your projects, whereas international players probably had a bit better access to cheaper capital. But I would also like to know what other things you feel currently hinder the scaling and international competitiveness of local businesses. Because I'm sure that access to finance is one, but there are probably also a couple of other things. What do you think are those factors that hinder scaling of local businesses to be as competitive as the big ones?
I don't want to sound like a broken record, but next to funding, I believe are strong institutions, the enabling environment for local companies to thrive. Political interference. There should be legislature that protects the local investor as well as is fair to the foreign investor. Knowing the background, I'm not saying they should give us anything special, but some cushion, some legislator that protects us Capitalism in itself is a predator, so long as I'm concerned, so far as I'm concerned. But if we have strong institutions and legislature that protects the sector, that that guides, legislature that guides both the local and foreign investors very fairly, because we're not coming from the same playing field. So for example, the capital requirement for a local investor should be lower than that of a foreign investor. The tax breaks should be different. Maybe some support in training, just some provisions should be a bit different till we get on the same level playing field. And this is not for lack of experience or determination or skill. And I want to repeat that, it's not for lack of skill or hard work. It is really because we don't come from the same environment. The foreign investor has a lot of support from institutions and in their countries, be it funding. And yes, I keep going back to funding because funding can do a lot. Or even the local entrepreneur, where we don't have the skill sets, we can always buy and import. But we have to have the ability to do so. And I'm saying legislature and strong institutions that protects us is key. It's key.
Thank you, Salma. I think this is a very important point. And I know, again, pointing to your case study, that there are a couple of examples in there that give an unusually honest and transparent picture what kind of, well, should I say, battles you won, but also had to fight in the first place to remain relevant as a local player, because it was not necessarily that you were facing an environment where the institutions were trying to protect or build up the local sector, as opposed to only being open to international businesses. So I think it's really interesting that you're reinforcing that point. Now, AJ, if I come to you, I know that Dawa Group is already on a journey to conquer the world, so to say. Even now, you're already doing businesses in a number of other markets outside of Kenya, and as such have managed to embark on the journey of being a multinational. But of course, when we look at the journey of Dawa Group and what you've done, we are of course curious to hear what would it take to be a global player that has relevance even outside of Africa. Because just like other parts of the world have big global businesses that play on the global stage, we should also build the same from within Africa. And we feel that businesses like Dawa Group, or also Salma's business, actually have the muscle to do that. But what would be needed in order to get there? What are the things that are missing that we need to bring in order to make that happen?
Thank you, Yasmin. Let me just comment on what Salma had mentioned. Two things that she did talk of is government support. Sadly, I'm not sure what happens in Ghana, but sadly, we as local manufacturers do not get the government support that we require to actually grow. She talked of taxes or tax breaks or some kind of incentives, investment incentives, legislature. Yeah, so that's non-existent. And to get that, I mean, it's a very difficult journey to get any kind of government support because of the strength of the multinationals, the European, the American multinationals. They've had over, I would say, their colonies for decades. So that still is a hindrance for us to get into the global market because again, it comes down to competitiveness. And the second second item she talked of was skill set. When we realized that we were growing, but we needed, again, we had reached a plateau. We needed a different type of mindset. We needed, which sadly we could not find that kind of skill set in Kenya. So we had to start looking overseas, and we started actually looking to the east, to the west. And then when you came, I think you met some of our management team. So we have brought in the skill from the west, we got some Portugal, from Germany, to actually now start thinking who've got the experience of the multinationals, European and American multinationals, and who have the thinking, who have the thoughts. So that also now takes us into another dimension. And of course, we are looking at investing or refurbishing our manufacturing unit, so that in the future, it would open up the European market for us. So yeah, so you have to start thinking like multinationals. You have to start, bullying them as well, and which we are in Kenya. Definitely, we've taken multinationals head on in terms of quality, in terms of perception of our products with the local physicians and local consultants. So you have to take them head on, and that will start move you into their league. Yeah.
Thank you so much. Also, again, what I appreciate from all of you today is that you are being very frank and honest with your answers, and I think that is really important to have the conversation. But some things I'm learning today are, one, that the skill set for building a global company is definitely different, but it's also not necessarily the biggest problem because it can be acquired. Often people say, oh, we have a lack of talent in Africa and all of these things, but that's not necessarily, well, maybe not necessarily true in the first place, but also it's not necessarily the big challenge that will hinder you from growth. It seems both of you are reinforcing the fact that institutions and an enabling environment are key in order to be competitive, but also from everything you've said so far in the panel, I can tell that there's a really big willingness to take risks when you see that it can pay off, in order to be a bold player that can take on the horns of the bigger players that you are competing with. Now, Franziska, no matter how we look at it though, money is still important. So if we don't have capital to grow and make sure we can get to the next level with our businesses, then all the talent and boldness in the world will not get us far enough. And as you know, from the background of our discussions for this initiative, one thing we are very passionate about is trying to understand how we can create those 50 million jobs that we are supposed to have in Africa in the next 20 years or so. So scaling companies like Salma's company or Ajay's company is crucial. How can we improve the access to funding for these kinds of businesses, / how can these businesses make themselves as attractive as possible for capital?
Well, it's a difficult question, and I would like to divide it into 3 levels. Very high level, when we thought about hidden champions, what are the key successful factors of, well, internationally, also in Germany, hidden champions? There are some key factors, which are high quality products or services, whatever you produce or you do, and some kind of specialization. In addition to a superior performance in quality and quantity, not necessarily the best price maker, but convincing by quality and performance and reliability. And then another factor is long-term, have a long-term view and focus on long-term relationships, be it with your customers, be it with your suppliers, So interact actively. And last but not least, innovation and development never stop. So when you are successful, then don't stop and don't think that the world stops here. As an entrepreneur, you always have to try to be on top of the wave and not following it. That's a very high level. If it comes to financing, then it's a little bit more down to earth. So if we look at companies, we look at management quality. Management quality is key. Corporate governance, find and or employ the right talents, and find the right structure to manage the company, to incorporate also a good risk management. And that's a particular challenge for family businesses or companies created by or still run by the owners, is don't try to take all decisions. What companies need is a good second and third level of managers who are able to take decisions on their own and just follow the common goal. Well, of course, the companies need a convincing business plan and financials in place and in good order and level of transparency to convince the banks, because the banks want to know whom they are dealing with. And last but not least, it's about the entrepreneur has shown that he or she is able to identify chances, opportunities, and take risks. But now the third level, which I mentioned, is a particular case for our initiative, because we talk about the medium-sized companies, the African companies, and I think here companies have a very big chance and maybe a niche to develop African brands to give a response to the customers in terms of local taste, local needs, local environment, and so act and think locally. And I think with this factor, with this approach, it's definitely possible to compete against the big shots, and in particular in Africa, I experienced that there is an upcoming pride of African people and consciousness, awareness of, okay, we want to buy locally because they understand what we need and they source locally. So I think that's a big niche and a big opportunity.
Thank you, Franziska. On the one hand, we now know all the checklist criteria of DEG. Thank you.
No secret. We are also very transparent.
Oh, that's great. And on the other hand, I also make an important point around us having to think as brands, because we need to make sure that there's a recognition of our brands being as competitive as international ones. Ajay, but you wanted to add something, so please let me give you the floor.
Thank you. I just wanted to add something what Christina said in terms of we being a family company, definitely we grew, but we made a decision, very conscious decision, that we have to professionalize. We have to bring in people who know more than us. Especially for what she said, the banks want to know who's making the decisions. So the founders then have to step back and let the professionals do their job. We will do it much better than what we ever thought we would be able to do. I just want to add that.
Maybe not better, but bring in different skill sets, as you said before. No?
Thank you, AJ. I think that's an important point as well, that we want to actually dedicate some future webinars to how to debottleneck decision-making and solve questions around succession, etc., which I'm sure are big for both of your businesses. But what I wanted to also bring in are some questions that we currently have in the Q&A section of our webinar. We have another 10 minutes to close, so we should give some people the opportunity to come in with questions. And there's one question here I would like to start with for Salma. And the question is, Salma, I'm so inspired. Is there anything you consciously recognize yourself doing to navigate sexism and racism, especially when accessing funding?
Sexism and racism. There's so many. Recently, I had a very recognized DFI speak to me about funding for a renewable project. And I was told that my proposal would go further if I had an European partner who had done this, and it would make the funding, the financial institution more comfortable. I was taken aback because I have navigated the most difficult environments and sailed through. And this person, the financial institution I was speaking to, had a profile and a background. They'd done their background check, so they knew what we had achieved. So to hear that, I was shocked that we still have to go through this at this point. Because as, like I said before, the skill set we don't have, we can always acquire. And we've proven that because UBI had started with 2 employees with a turnover of less than $1 million, and within 7 years, we had a turnover of almost 300 million. We had been valued by one of the big 4 at 500 and something million dollars, and we had gone through all of that. We had brought in the skill set we needed. Currently, most of the operations are being run by people who are not the founders of the company. The operations today is run by people who are not the founders. We have brought in experts, and when the technology or skill set was transferred, they go back, and where we need them, we need another skill set that we don't have, we import. So we've successfully done this. And in this sector that I'm in now, renewables, there are so many skill sets in Europe, in Germany for one, who's far ahead in renewables, and they're willing to come and work with us. So that should not have been a deal breaker, but it was. I was really shocked. And we've seen it over and over again when we go to funding agencies. Companies that are run, and statistics have shown that companies that are run by men are getting a bit more than those that are run by females. Will that deter us? No, we'll keep pushing. So that is not a deterrent for me at all. But it is real. It is very real. Even within the local financial sector, they are more comfortable giving funding to a multinational that probably doesn't need it than to give it to the local entrepreneur who's struggling. And I guess it's because they believe that with the multinational, their parent company would come and bail them out if there are any issues. And with a local business, there's no bailout, obviously not from the government, not from anyone else. So they just don't want to take the risk. So to answer your question, yes.
Clearly. And I know from our times as working on your business that you also did share a bit about what it was like to be a woman in the energy sector building such a big company. So to the person who asked the question, I also recommend you have a look at the case study that we wrote about UBI Energy and Salma's journey. It will probably give you some additional insights on how she handled certain situations. But Franziska, there's another point here. It's actually a lot of questions, but let me just try to aggregate it. There's someone here who's saying that there are a lot of initiatives already out there to support companies in both Africa and Germany on their journey to become a hidden champion. But how can we coordinate better? Let me put it into my personal words. How can we start selling AJ's product in the German market and get Salma to manufacture some nice solar panels for German customers?
Wow, I think that's a question that is too big for this session, and we are coming to an end now. But I think we can only do all our best to use our networks and to connect people and relationships, connections, networks. This is also one element why we created this initiative, because we feel that this is extremely important. So maybe it's one answer to the question, how can we coordinate the initiatives?
Absolutely. I think we are at the early beginning of our journey. This is the first cohort of hidden champions we've identified. And again, for those who joined late, UBI Energy and Dawa Group have been identified out of hundreds of companies we looked at. And we are really happy that we were able to start working with them. If you scroll up in the chat, you will be able to see a link to the website of the African Hidden Champions Initiative, where you can download the case studies in both an abridged and an extended version if you want to learn more about Dawa Group or UBI Energy. The case studies are great reads, give you great insights, no matter if you're an investor, entrepreneur, or maybe a business school student. So we invite you to read them. Our time has lapsed already. I could have talked for another hour or two, but we must all close our Friday afternoon. And I know, AJ, you have to attend the surprise party, it sounds like. But AJ, I would like to give you the closing word as one of our first participants of the African Hidden Champions Initiative. Maybe a few thoughts on the initiative and what you'd recommend to future entrepreneurs and companies that we're looking to profile to make the best out of it.
Thank you, Yasmin. It's indeed an honor and a pleasure for me to be here this afternoon with such a high-powered panel. To the entrepreneurs, know when they want to jump into a market, get market knowledge, know what you're getting into, learn the market before you get in. I think that's the most important thing. And look at something that will fit into the local market. A lot of times you'll bring in an idea but doesn't fit in the local market, and then you'll end up wasting your time. So something that has to fit into in the market is my message to budding entrepreneurs. Thank you.
Thank you so much. I would like to thank all of the panelists. I think this was a very exciting discussion. And again, in particular, want to thank you for your frankness on the topics that we touched on. And I think in summary, there's really been a lot of learning here around what it would really take for us to continue supporting the journey of companies like yours that are shaking up markets very quietly. And I'm looking forward to continuing the journey. We're looking forward to continuing to have you as friends of the African Hidden Champions Initiative and engaging you further with the work we do. And Franziska, a warm thank you once again for being our cherished partner for the African Hidden Champions Initiative, especially because it's so programmatic that Germany is also home to a lot of hidden champions. This partnership was meant to be, and we are really, really happy that we have the chance to work with you on this program. So I wish everyone here a beautiful Friday afternoon or evening, depending on where you are, a great weekend, and look forward to the next webinar next quarter on African Hidden Champions with 2 other executives who are going to share their stories and honest insights. Thank you, everyone, and goodbye for now.
Thank you. Bye-bye. Thank you very much, Yasmin and Salma and Ajay.
Thank you.
Thank you.
Bye.
Bye-bye.